We are the Rice business team that participated in the CQA challenge this year. Today, we will be presenting our portfolio strategy and performance since October 31st of 2016. As for our agenda, we will first introduce the team, then discuss our investment philosophy, and move on to portfolio construction and performance. My name is Nasir Rizvi, and I'm a second-year MBA student at Rice Business School. My team members include Fasai, who is an undergraduate in electrical engineering, Jessica, who is an undergraduate in computer science, and Prateek, who is a first-year MBA student at Rice Business School. Our faculty advisor was Professor Farnsworth, who is an associate professor of finance at Rice Business. Moving on to investment philosophy. We aim to create a beta-neutral portfolio with equivalent long and short positions in the Russell 1000 index. Using historical market data, we developed a quantitative investment strategy which focuses on key determinants of security prices and can be expected to generate excess returns over the long term. We ran through numerous rounds of trial and error and backtesting in order to arrive at a proprietary strategy which provides excess returns over the long term while minimizing losses during times of market volatility. Using quantitative investment methods, we combined quality and relative valuation factors to construct our portfolio. These valuation variables are simple but extremely effective and elegant in determining valuation of equity securities. The first variable we used to determine allocations was the Piotrowski F-score. The score is primarily a determinant of earnings quality and financial strength of a company. The score uses simple accounting measures to rate companies based on recent financial performance. It utilizes metrics related to profitability, capital structure, and operating efficiency of a company. The Piotrowski score is a fairly well-known metric that is used by numerous investors for screening stocks. In addition to providing excess returns historically, we chose to use the score as one of the fundamental screening criteria, as our entire team strongly believes in investing in quality assets which can provide long-term outperformance. This can not only provide excess returns over the long term, but will also limit volatility during economic downturns or market corrections. The other metric we used was relative valuation. We attempted to identify discrepancies in security prices by comparing market multiples of companies to other companies in the sector, and also with average ratios for the sector and the broader market. Relative valuation is among the most simple, effective, and widely used valuation method in capital markets. However, since many companies trade at different multiples due to explicit or implicit differences in assets and capital structure, which are very hard to identify on a quantitative basis, we chose to use Piotrowski score as a primary screening criteria and use relative valuation as a secondary determinant during portfolio construction. Now we're going to talk about portfolio construction. Utilizing the Piotrowski score to rate companies based on financial strength, we distributed the stocks into different buckets based on the score, their price to earnings ratios, and their EV to EBITDA multiples. After that, using internally developed proprietary investment models which utilize historic data, we identified which buckets can be expected to outperform and underperform over the long term. As a last step, we ran a statistical optimizer to maintain beta neutrality and long the assets in the outperformance buckets while shorting the assets in the underperformance buckets. This we expect will generate excess returns over the longer term. To provide a summary of the rules we set to construct the portfolio, we did not consider market capitalization, liquidity, sector or industry, or style classification of individual securities to determine whether they should be added or excluded from the long or short portfolios. We maintained a diversified portfolio by limiting the amount invested in a single asset to 5% of the long or short portfolio. We did not engage in unnecessary trading and only renewed individual positions when market price movements and financial results caused portfolio stocks to move outside the investable buckets. Moving on to discuss portfolio performance and attribution. Our portfolio generated a return of negative 28 bips and a Sharpe ratio of minus 0.54 between October 31st of 2016 and Feb 14 of 2017. In our opinion, one of the key factors behind subdued returns during the reportable period was a significant shift in investor expectations post-election, which hurt short-term performance of our portfolio. We believe that returns should pick up as capital markets normalize after adjusting to changes in macro and sector-specific policy changes, which our quantitative investment strategy does not account for. To shed some light into the long and short portfolios which we currently hold, we have provided a basic snapshot of key accounting and market price metrics for the two portfolios. As can be seen from the table, on average, our long portfolio assets relative to our short portfolio assets are companies which have provided much higher accounting returns over the recent past, but are trading at similar or even lower market multiples. The price to earning ratio is fairly similar, while short portfolio holds assets which are trading at a much higher EV to EBITDA multiple. We believe that these market price inefficiencies should subside, and movement in prices of our assets will result in long-run outperformance of our long portfolio relative to our short portfolio. Moving on to our last slide, which illustrates the largest contributors to our portfolio return. As can be seen on the chart on the left, our best long assets were NVR, NEE, and PGR, while our worst performing long assets were ESRX, WR, and MANH. For the chart on the right, which represents our short portfolio, our best performance were MAT, ANAT, and BDX, while our worst performance were LBRDA, LBRDK, and CONE. Thank you for your time.